following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start over in the morning. How cool is that? Market-wise, let's take a look at it out here. We have the Dow Industrials up 32, NASDAQ up 4, S&P's a flat. Gold contract up, let's see, 590, trading at 1161. We have silver flat at $15.81. Platinum's up $10 at $9.93 an ounce. Copper's flat at $2.41 a pound. Light sweet crude. Whoa, hold it. Is that right? 1 second. Let me see that thing. CR. That's going to be quite a trip if that, yeah, that's right, man. In between that. So light sweet crude's down $2.43, trading at 47.41. That's going to be wild watching this thing shake out because that's on light volume too. That's pretty cool. That's going to set up as a nice buy. Bonds, we have the 10-year up 10 ticks, 128.25. 30-year up 29 at 157.26. Both the 10 and the 30, folks, rejected lower price against last week. Had lighter volume, going topside once again. Bonds want higher price, lower yield. King dollar down 53 ticks at 94.83. You got the euro up 14 at 113. And the yen is trading at 119.96. Our phone number is 877-927-6648. Give us a call, folks. What's going on in your world? Now, let's go to the world of the SPY. We take a look at the world of the SPY. This is what we have happening out here. You get a flat market. We have another contraction of volume. You do have the Columbus Day holiday, so you can expect that. But bottom line, you're pushing into highs, and you have a contraction in a big way once again. What is that? That's a bearish indication. We did 107 million on Friday. You did Thursday 153 million. We are going into 276 million. Today we're going to do all of about 45 million. NDX 100. Now this one's going to get intriguing, and this is why. The NDX had failed on Friday with price and volume. Thus far, we're over 106.64. We're only 11 pennies over it, but the bottom line is that the contraction is pretty amazing. We've only done 12 million shares. On Friday, we did 23 million. You're going into 56 million. But if we close over that 106.64, bottom line, it can get to the top of that range, which is quite a bit, because on the 17th of September, that's where the market failed. We had traded the NDX 100, traded up to the 108.72, closed out at 106.64. Bottom line, so that is a big number to watch. Inside the IBB, inside the NDX 100, of course, it's all about the IBB. The strength today inside the NDX 100, actually, Electronic Arts is the number one right now. Electronic Arts is up $3, 5% at 68.14. Regeneron is up $21. That's a biotech at 5.25. You get American Airlines up 139 at 43.61, and you have Vertex Pharmaceutical up $3.39, 2% at 113. Now, taken away from it on the way down. This is pretty wild watching this thing shake out again, because Wynn Resorts is going south once again. Had a dead cat bounce going, no doubt. You have Wynn down $4 at 71.35. You had Tractor Supply down $3.79 at 85.85. Green Mountains off $2.29 at 55. And you got Whole Foods down 63. inside the Dow Industrial, strength versus the weakness. This is what we have inside the Dow. The Dow's right now up 41 bucks. United Health's number one. That's up 335. Visa's up 117. Nike's up 151. And Boeing is up 113. Taken away from it on the way down. Chevron is off $1. Caterpillar is down 73. Big Blue is down 137. And DuPont is off 48. Let's go right over to the oil sector because these babies are going to line up really nice. If we start with Chevron, we take a look at Chevron. What we have is that Chevron is trading at 88.58. It's pulling back slightly, dramatically lighter volume. Bottom line, we'll see whether this thing can get into a pullback of somewhere about $79 to $77. That, if we get that pullback and you have the light volume, we have the light volume today, but if you have both, bottom line, that'll be a nice setup to have a buy. Let's go over, we're going to look right at this oil market because I want to see what happened with oil here. Okay, so oil, there she is. Okay, so oil had a nasty pullback, no doubt. It was 100% move or move. Friday, it gets up to 51.42. You have the volume behind the move. Today, we're pulling back with 166,000 contracts. I see it. We're changing the months, too. I got it. Okay, cool. Okay, so this baby is setting up somewhere down around 44.63. That's where this is set up right now. We'll see how it handles that price point as it comes down into that level. But thus far, that's how that baby's setting up. If we go over to ExxonMobil, XOM, we take a look at Exxon. Doesn't even look like it wants to pull back. Out of it, you know, Chevron and Exxon, Chevron's still the stronger equity here. But bottom line, it doesn't look like that little baby wants to pull back just yet. We go over and take a look at Apple. What Apple hasn't done is this. Apple got to a price point Friday of 112.28. Now, as we were going up into that level, you actually had some volume come in the equity. We did 52 million. You're going against 73. Apple looks like it's going to test this 113.51. 113.51 is the high of the downdraft of the 29th. That's kind of, I would have loved to see it tested today, but that's how that looks to be set up. The IBB, which runs the composite, that little baby did get over the high of Friday, which is 311.50. The high of Wednesday, which is 311.46. It looks like we're going to close under both of them, which would be a failure on price and volume, that's where the yin and yang is going to be set up for kind of the rest of the week inside the NDX 100. We take a look at the small caps. What we have with the small caps to the IWM is this. IWM, you get a sideways move. IWM did fail on Friday. If we close... See, but the IWM is not done going down either because really what we have done is that we're pulling back on lighter volume. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Coming right back. Dow is up 38. NASDAQ is up 6.5. S&Ps are up 0.5 point. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 39. NASDAQ is up 6. S&P is a flat. Let's go to Laurie in St. Pete. Hey, Laurie, what's going on?
Hey, Tom. Thanks for taking my call. I love your commercial there with your cell phone in the hands. That is really cute. Tom, I was wondering, we talked a couple of weeks ago, and I probably kind of waited too long, but I was kind of watching the market, and we thought maybe it might go retrace back, but it looks like it's not going to retrace back.
The market?
Well, yeah. Well, you know, I mean...
yeah, the market's going to retrace back. If you're calling about the oil stocks, though, yeah, they went topside, and you did want to wait for a pullback and buy them.
Right. Tom, you said you were going to kind of watch out for me to see what, you know, I was telling you about buying some of these stocks because of my age and everything, that I'm looking for something that would have growth, but kind of, you know, we were talking about the big stocks.
Right. Okay, so we start with CVX. Okay, so CVX right now, you know, just went from a run from 75 up to 90. Wow. You're at 88.48, and, you know, like 79, that would be a decent place to get in.
Okay.
And that right now is still paying a 4.8% dividend. So CVX, COP.
Do you like COP?
Let's take a look at it. ConocoPhillips, 1 second. COP. So Conoco, they're trading at 95. Liquid, okay, this is where the difference is. Let's see. So Conoco has quite a bit of natural gas also. This is where the difference would come in. Yeah, but this looks good too. Okay, so let's take a look at this. So this came off, well, the last 2 weeks, 45 to 55. These are big numbers. This one here, let's see. Okay, so that's paying a 5.3% dividend. This one here, you know, 49 would be the number.
Right.
And let them pull back. They're going to pull back. That oil contract pulled back pretty hard today. On price, it pulled back hard. The volume, you know, was less, but we just pulled back 4.7% in the oil contract, so that's a big number. Yes.
I do have your gold report too, Tom, and anyway, I know you had you had gotten into some, and you think the gold pulled back a little bit to get into some of these stocks?
Well, you'll get another gold report tomorrow. I mean,
Right.
we're not going to be buying at these highs, that's for sure. I mean, we already own, quite a few. So, if anything, I'd bring the stops up again, and they're acting the same way. Let's pull this out. So, if we pull over, let me put a few of these up. If I pull up an Eco Eagle, AEM, what you have is this. An Eco Eagle just, kind of went from a price point of 21 up to 30. You got over the highs today. You're going to close under them. And the real key is going to be, do you take a pullback to 20? See, this is where this gets interesting. Because the run was so extensive, this could pull back to 25.87 in a heartbeat. Mm-hmm. Or, yeah, it could. That's the bottom line. When you look at the XAU, let me go look at Franco-Nevada for a second. So Franco-Nevada, same setup. They've done 100% move for move. So I expect you're going to see them also pull back. The XAU and the HUI has confirmed it got over. They both got over their highs. They got over their highs with volume, which is really impressive. The XAU last week, folks, we did 260 million. It took out the swing high of 204 million. The HUI got over the swing. We did 144 million versus 115. So in both cases, those equities want higher price.
Mm-hmm. I heard you talking with David about the Microsoft. Do you think that might be one that might be something to look at?
Let's take a look. So if we look at Microsoft, I wouldn't be buying Microsoft.
No.
Microsoft, we're at 47. Microsoft is building cars to get down to $40. And each and every time down there, it's pretty dramatic. On a monthly basis, you're down there with 990 million shares. That was the January. We came back down in August with 770. And then the correlation up at the highs, you're at a high on November with 520 million. You're at a high in May with 630. So when you do those correlations, and it's going up this month with 230. I wouldn't bite there.
Okay, not that one. Okay, well, look, I know you've got probably other calls and other things to do, but I'd like to call you again and see if you did come up with anything else as far as we were talking about the big companies.
Something longer terms, yeah. So, I mean, the other, on a pullback, I'd get into Exxon too. Exxon would be a buy at 73.50.
Okay.
And, it's done it. They've come off those lows. They've tested lows. They've come off with, volume. And the thing that's intriguing about the oil stocks and the gold and silver stocks right now, folks, they all want to go to the May high. That's the technical sense. The fundamental sense is really cool because inside the fundamental sense out here today, there's plenty of large funds that are saying that no, you better not touch the commodity stocks because the second leg, another leg, is going to be coming down. And, that's a nice contrarian play.
Mm-hmm. Okay. All right. Well, thank you very much.
Okay, Laurie. Have a great one. Have a safe one. 877-927-6648. If we do look inside those commodities, you talk about it's amazing when oil can run around and go up and down by 5%. So we had gasoline down 4.8% today. That's wholesale unleaded is 134. Oil is down 4.7. That's 47.77. You got heating oil down 4.6 at 154. Big numbers. The strength in the marketplace out here today was the nickel and aluminum. Nickel was up 3%. Aluminum was up 3%. You don't trade either one of those in the futures markets, that is. They do trade, folks, but you get killed. The spreads are way too wide. Some of the Dow stocks out here, let's take a look at them. American Express is down 16. You got Boeing up at buck. The JP Morgan's down 32. You got Honeywell down 19. If we do go over and take a look at Big Blue, what you're going to see is that and this is where some of you really want to So Big Blue came off its lows. The low that it's been hammering is 140. You got to 155, I think, 153. Now you're pulling back. If Big Blue gets back inside, it's really 148. It's going to go right after the lows again. WYNN, W-Y-N-N. This one's really intriguing in the aspect that this has been going down forever. You had a small counter trend bounce. When I say forever, this has been going down since March of 2014. It was $247 a share. You know, hits a low out here of 50.96, gets a bounce going to 76, and this could very well come back and test the 63 area. Pretty amazing. 877-927-6648. Dow is up 37, Nasdaq's up 7, S&P's are flat. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up $44. You'd have the Nasdaq up 9. S&Ps are up $1.50. And inside that Nasdaq, would you have that IBB? She is trading now 309.45. Some of the higher volume stocks in this low volume market out here. This is what you have. You have Twitter down $2. Eli Lilly's getting the smoke. That's down $6.40. That has heavy volume. VMware is down $6.17. Dell is taking over EMC. They're going to basically take those over, and they're going to push out an extended another equity that's going to a tracking stock for VMware. I'm sure the holders of VMware right now are totally flipped out because if we take a look at VMware, what you're going to see is this: you are down $6.06. You're blowing away the August lows. The August lows out here, the 26th rather, was 4.9 million. $76 is the number. It's ABC down. Your A point on this is 93. Your B is 76, 86, 96. So you got what, 17 bucks. Your C is 82. Bottom line is that that sets up 62. That sets up a 65. And right now you're at 72.48. Because what this does, see, now watch this. Let's pull this back on a monthly for a second. So on a monthly, yeah, I'm real. So 65.02 is a high volume swing low. Now, what also happens here is this. Now, watch how this goes, folks. If you're watching Target TV, what you're going to see is I'm going to bring up the aspect of the ownership. So the ownership inside VMware is that EMC owns 35.25% of it. What happens in an aspect like that, of course, is that that is a controlling interest. Over 51, of course, is the controlling interest. But that, I suspect, is going to end up being a controlling interest. It's not going to be too hard to get an additional 16% of the vote. Now we go over to EMC. What you're going to see is this. EMC is trading at $28.35, $28.26. Now, Dell is claiming that this takeover bid is worth $33. Well, the math behind it doesn't make it worth $33 where it's trading right now. That being said, I believe that the way that this is going to come down is that it's going to get passed anyway. Why? Because what happens is that the only people that are going to be voting on it are the EMC owners. And when you take a look at the chart alone inside of this, EMC, yes, in 2000 had a high of 102. That being said, this is at a high when you go back all the way to 2001. So there's been plenty of money that's been doled out inside the company, inside the executive compensation, all of the above, with options that there's going to be plenty of folks that are going to make a huge amount of money if, in fact, that deal comes through. You got to remember something in all takeovers. In all takeovers, in fact, let's look at this for a second. In all takeovers, folks, what ends up happening, let's see, is that if you take a look at the CEO and you take a look at the CFO and you see where the holdings lie, that gives you a pretty decent understanding of and what they're going to get on the takeout. That's where these things get taken out. If we go to the CEO, he's got 2.1 million shares. Which is not bad. That's big, it really depends on, let me just see, the president. So, no, he's the president. So you got chairman, the CEO, then you got vice chairman. I see this guy here. And then we go down to the president in charge of infrastructure. That's pretty wild. So when you get down, that's pretty interesting. Oh, no, he still has almost 1 million shares. What has happened, though, what has happened is that each one of these that you're bringing up, it's not that they've sold shares, but they've sold some shares. They have sold some shares. So bottom line is that if they've been selling shares, at the price that has been in the last 3 or 4 months, which that is saying, guess what? They're going to move them all out. We go take a look at... Let's go take a look at Alibaba, BABA. Alibaba is trading at a price point of 70.31, and this also looks like a dead cat bounce. Alibaba has gone from, I believe this went right back underneath its IPO. We just went from $120 down to 57. This went IPO At 68. Yeah, it did. That traded underneath its IPO price, which is pretty amazing. Let's go to Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom, how are you? You have a good weekend?
I did. Yourself?
It was outstanding. It was 85 degrees here yesterday, just beautiful out on the boat, and
that's sweet.
Threw a switch, and today it's 52.
Really?
So, yeah.
Wow. That's that's a switch, all right, man. Holy cow.
It happens that way around here, but
it does. I'm with you.
Here comes fall, and it's boom. But,
yeah.
Looking at this Hecla.
Let's take a look.
Hecla Mining.
Yeah, we got Hecla Mining. Hecla, folks, is a large silver miner, does business in the United States and in Mexico. The low for the year is 177. The high is 354. They pay 0.4% dividend. They take in about $450 million a year. I like these setups, man. Yeah, I'm long it. I'm just wondering, on a pullback, where would you add to this thing? I'd add. Now, this is going to be really hard in this market, folks, and this is what it is. Not all of them, but just about all the silver equities, the gold equities, they've made the run, and the run's been pretty intense because it's been 5 days up, and some of them are 40, 50% up. Because they're off small numbers too, by the way, but it doesn't matter. If you own 1,000 shares, you're up 50%, 40%. So it's like I'm looking at these and I'm saying to myself, and I happen to own Hecla and I own Gray Panther. Do you know what I mean? I'm saying to myself, okay, man, am I going to sell them now? Do you know what I mean? It's like, okay, I'm not because like when I look at a Hecla, it's like, okay, we're at 237. It can go to 226. It can go to 221. But I think that's it, man. Yeah. I like how they're all operating. The XAU, the HUI, they both took out their swing points, took them out with volume. If we put this with a weekly, what you're going to see, Hecla, there's 44 million shares versus 28. That's nice, man. And then you give the downdraft at 43, so that's saying, hey, these all look to me like they want to go. In Hecla's case, it would be the February high. In most of the other cases, it's the May high. That's how they're set up, and that's how the oil stocks are set up too. So that's telling me that the dollar's going to continue lower, man. Yeah, Cook, and they got some good-looking bonds out there too. If you ever looked at them, they do. But, they do. Cooking, brother. All right, well, have a blast at the Traders Expo. Yeah, thanks so much. Okay, right, have a great one. Have a safe one. Well, folks, we are going to be at the Paris Hotel this Wednesday, Thursday, and Friday in Las Vegas. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is up 45. Nasdaq's up 8. S&Ps are up $1.50. And what we'll see out here, folks, is that you got a Columbus Day anemic volume. Right thus far with 510 million on NYSE, and we take a look at the Nasdaq Composite. You're at 1.1, and in both cases they're pushed into higher highs. Okay, so bottom line, if you're a bull, you don't want to see this. If you're a bear, that's exactly what you want to see. If you are a bear, you'd like to see them pull back slightly into the close. It doesn't need much, by the way, which is pretty amazing. The Qs are teetering right at well, not right at it. They need about 19 cents to pull back. That's going to be hard to do, but can be done very quickly, because we got down to 106.56 at 1300 hours today. And all it takes is a bit of profit taken or selling inside that IBB in order to get that baby done. Because what you do have out here, Regeneron is the one that's been on the run in a big-time way today. That is trading up $21 right now. It has been as high as $27. Bottom line, that's how Regeneron likes to trade, too, which is just amazing. There's no two ways about that. Amgen was another runner out here. Amgen right now is up 383. The strongest equity out here today inside the NDX 100, folks, is Electronic Arts. That little baby has some juice underneath. Let me just see if they come out with numbers or what's going on. Oh, I see. Interesting. So this is going to be about news-driven Star Wars. Star Wars Battlefront getting positive reaction. Yeah, Star Wars. Anyway, that big game. No two ways about that. I expect you'll see that game will not only. Well, if they're saying it's getting action, I can definitely see. The whole gaming aspect, folks, is all about shoot 'em up, and Star Wars, no doubt, has a lot of shoot 'em up inside that whole texture. We go take a look at the XLE. Now the XLE, the XLE. Okay, so it's down 86 cents. You're at 68.08. Light volume. You have 17 million on this pullback. It'd be really sweet if this thing could roll somewhere down to the 64 to 66. And it's real possible that we won't. You'll see a slight pullback inside these commodities, but nothing heavy. And a lot of it, no doubt, has to do with the U.S. dollar. Let's go over to the dollar, because the dollar continues to want lower price. We're at 94.87, and your range is 95.27. Anything inside 95.27, your probability is higher that you're going to go hit the 92.85. And that signals that, let's go take a look at the euro. It is pretty wild. There's no doubt that The euro out here today, we're at 113. Now, that's having a hard time getting over the 114 level. We got to 113.97. We'll see but what happens with the euro also, anything inside of 113.65, no, 1.1365 is that you're in the larger range, and you're inside it by a tick. Pretty wild, but and it's like, how can the European currency be stronger than the dollar currency? Well, a lot of it has to do with the lending aspect. So listen, watch this. This is pretty wild. Corporate America's binge on debt and euros has left it with indigestion. The European Central Bank's effort to stimulate borrowing and lending, I'm reading the story from Bloomberg that just came across, folks. The European Central Bank's efforts to stimulate borrowing and lending have been so effective, they've drawn U.S. companies to issue $101 billion of bonds denominated in shared currency this year, the most since 2007. Now watch how this works. This is our companies issuing bonds in euros. Remember a couple of years ago we were talking about the world, which the world still is doing, issuing bonds in U.S. dollars. Well, when you issue in U.S. dollars, what ends up happening? You're going to sell your currency, you're going to buy U.S. dollars. Well, just the opposite has been happening, folks, is that because of the structure, and here I'll show you the interest rate structure inside of Europe, it's much cheaper than us. Our companies are borrowing money in euros. Well, what ends up happening? They got to turn in dollars for euros in order to do that. The flip side is so many U.S. companies have been borrowing euros to take advantage of the historically low interest rates that the cost to swap those proceeds back into dollars has surged to the highest since 2012. With Federal Reserve makers still expecting to raise rates before the year end, and speculation building Europe will have to boast stimulus efforts, the bottleneck looks to only get worse. There is just too much money in euros and yen relative to what's going on in the dollar market. Head of currency at Credit Arcola said, the cost to obtain dollars in the basis swaps market, where floating payment streams in different currencies are exchanged, doesn't have a direct impact on the value of the foreign currency exchange. It does reveal a continued faith in the U.S. economy as a place where interest rates are most likely to rise, and there will be opportunities for cash to be deployed. That faith has recently been shaken in the currency market itself. So check this out. The dollar declined against 15 of its 16 major peers during the past month as the Fed refrained from raising rates at the September meeting, and U.S. job creation trailed forecasts. Over the past 12 months, the U.S. currency outperformed all 16 according to that data. Bottom line, folks, is that when you cut to the chase and you look at this, that is one of the reasons, doesn't have to be the main reasons, but that is one of the reasons that the euro is stronger. And it's really hard to flip your head around that, meaning that, because when you look at the mess that is in Europe, you say, oh God, how can that be stronger than our U.S. dollar? Well, when you look at the bond structure, it's pretty easy to see. Our 10-year is at 2%. You go to Germany and you issue, you're at 0.5%. France is at 0.9%. Italy is at 1.6. I don't know what the smooth out rate is on this, meaning what they're issuing in euros. I'm going to find out. But that is the texture and that is the essence, okay, of how currency move. Now, what's also going to happen here is this, is that inside that texture, the bonds that are issued in euros also have to pay interest in euros, okay? The wild deal here is that you talk about getting whipsawed. I can see the Brazils of the world, the emerging markets of the world, they were issuing bonds in U.S. currency a couple of years ago. The reason they were doing that is they can move it out because folks didn't want to buy bonds inside their own currency. What has that done to them? What that has done to them is that they're paying interest rates right now. Well, the interest rate at that point was maybe 5-10%. Because they've lost 30% in currency, you can add 30% onto that rate. You can imagine how they're going to try to pay that back. Hard deal to do. Now, fast forward into the euro currency, you'd think that the euro would be weaker compared to the dollar, but because of demand, the euro's getting stronger, the dollar's getting weaker. Pretty wild. What does it all say? It says that dollar weaker, commodities higher. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 38. You get the Nasdaq up 5. S&P's flat, and we're going to come in with about, let's see, NYSE is going to come in all over 650 million. On the Nasdaq, we will come in with you're going to come in with about 1.2. No, 1.3. So what you're going to have out here is that you are going to have a higher high. You're going to have dramatically lighter volume. It really doesn't matter. You can go to every ETF structure and you're going to see the same. The diamonds right now have done 2.5 million. You're going into 12 million. We did 5 million on Friday rather, and on Thursday you did 8.1. We take a look at the SPYs. What you're going to see inside the SPYs out here. SPYs right now have done 48 million. We did 107 million Friday. Thursday did 153 million. You're coming into 276 million. That's about as intense as you can get. The IWM is a little bit different because what the IWM did is actually it backed off. The IWM has 18 million. And we did 26 million on Friday, but Friday you're pushing into the high. Today actually backing off. So bottom line is that you still don't have juice on any of these markets as they're at highs. What I expect you're going to see if we go overseas, we look at the FTSE, you look at the FTSE out here, pull back today, pull back $40. That has had quite a run too, by the way. That had just run from 5,877 up to 6,400. The DAX in Germany is really weak, and the DAX just couldn't get out of its own way today. It was up $23, but the DAX is showing that it does continue to want lower price. Over in Asia last night, they had quite a run over in Asia last night. You had the Hang Seng up 1.2%. Shanghai was up 3.28%. Of course, that's off lows that are pretty dramatic. And in Shanghai, this is going to be pretty, this is something you really want to watch because we did have volume in Shanghai. Volume last night, we did 38 billion. So that's saying you're going to go higher. Man, this is pretty cool, actually. So we hit 2850. I was looking for 2500. It's interesting to see what's going to fly here. Let me put this on a weekly for a second, because the way that you come off that with volume, well, it's gonna have to get back inside the range, which is another. It was up 104 last night. It would have to go up another 93 to get back inside that range. But the way that it did trade last night, that very well could do it. Inside the gold market, XAU, HUI, they're both done 100% move or move, meaning that they have the juice. They've given it up on price out here today. You know, the XAU trade is 57. You're at 53 now. Not a bad setup, though. Still not a bad setup, but you can expect that you're going to get some kind of a pullback with the type of run that we've had already. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. You can get it right on your cell phone, tfnn.mobi. Live programming starts at 8 o'clock in the morning, go from 8 o'clock in the morning to 6 in the afternoon. If you do want to get Tiger TV, just on your cell, go to tfnn.com. You'll see that on the right-hand side, bottom line, the little box. You can hit that box. That'll give you the full Tiger TV audio and the video. If you do happen to be in Vegas this coming Wednesday, Thursday, or Friday, we're going to be at the Paris Hotel. We have a booth at the Traders Expo. Come visit us. Dow Industrials right now up 38. You get the NASDAQ up 4.5. S&P's a flat. You stay right there, folks, and we're coming right back after the close with a few numbers for you.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Live in faith that the whole world is on your side so long as you are true to the best that is in you. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 47, NASDAQ up 8, S&P's up 250, gold contract up $6.90, trading at $1,162 an ounce. Silver up 1 penny at $15.83 an ounce. Copper flat at $2.41 a pound. Light sweet crude down $2.20 rather at $47.43 a barrel. Oil took a hit down 4.8%. Bottom line, folks, you're pulling back with lighter volume. Oil looks like it's going to set up a buy somewhere around the 43, 44 area. Bonds, 10-year up 9 ticks, 128.25. 30-year up 29 ticks, 157.26. Bond market, once again, folks, rejected lower price last week, had lighter volume, moves higher today. Bottom line, bonds want higher price, lower yield. King dollar flat at 94.86. The euro up 4 at 113, and the yen trading off a quarter penny at 120. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Across the board, folks, we got dramatically lighter volume. You have Columbus Day. Bottom line, though, you're pushing into highs. You get a contraction of volume. That's saying lower prices are coming at us. So, the SPY, what do we do out here? We did 52 million shares. Let me put this up on the daily. Okay, so you did 52 million shares. You closed at 201.59. Bottom line, 201.59 is that you are into the trading day from the 17th of September. The bottom of that is 199.28. That says, hey, you can go test the top of that, which is 202.89. The correlation is pretty intense. We are trading into 276 million shares. We did 52 million. Last Thursday, you did 153 million. You got to a high of 201.55. Friday, we did 201.90, and you did 107 million. You can see 52 million today. So just when you do the correlation that you are at higher price, just picture if we were all in the same room, folks, and someone has a widget up in the air and says, do you want to buy this widget? And the first day you were in the room, you had 153 million people in the room. And you're buying that widget at 201.55. And then today, you only have 1/3 of those people in the room, and you're buying that widget at 201.60 to 201.76. So you're paying more money. There's 1/3 of the people in the room. Now, that's not even about what we're going against. We're going against 276 million as well as 346 million. That correlation in itself is pretty intense. What does that say? That says lower prices are still coming at us. NDX 100, we take a look at the Qs. It's the same setup inside the Qs. What you have with the Qs out here is this. We did 16 million shares today. We did 23 million Thursday. You did 50 million Friday. You're going into 56 million, which is the 17th of September. You're going into 97 million, which is the downdraft that occurred on the 21st. We take the first day of the downdraft, it was 57 million. The second day was 97 million. The third day was 150 million. Pretty intense. Now, gold. What do we have with gold? Bottom line, gold's got over its first swing point. That swing point being the September 21st, September 24th area. The high of that is 1156.40. We're at 1162. This little baby is getting ready to get up into its August 24th swing, which is the 1169.80. We hit 1168.60 today. I expect what you're going to see, you'll build some cars, and we're going to be up into this May 18th area of 1234. We go take a look at the oil contract. So what do we have with oil? We're rolling contracts on oil also. What happens, folks, is that oil trades by the month. The rest of the commodities trade by each and every quarter. Oil out here today was down $2.23. We've did 170,000 contracts. You're going against 175. You're going against 146 and 170. That's on the Z contract, which is the December, I believe. That's the November contract. CLX that we're just rolling out of today. That little baby, it was down 223. That's 367,000 contracts. That roll is on. Bottom line is that that has pulled back with slightly lighter volume. But I do expect you're going to see that oil market will pull back a bit further. Now, bonds. The 10-year is trading up 9 ticks, 128.25. This is back in the larger range. That larger range, as soon as you're back inside the 128.19, this is a complex ABC up, folks. And what a complex ABC up means is this, is that on the 2nd of October, the 10-year goes to 130. You have volume of 1.9 million contracts. It blows away the last swing high up here of the 24th of August. Then complex just means that it didn't hold price. It comes back under the B point, has lighter volume, and then goes right back into the B point again. That's what we've done. So that still sets up a 131 inside the 10-year. A 131 inside the 10-year, of course, is going to bring it back under 2%. Right now it's 2.088. The 30-year has strength and was stronger today than the 10-year, which happens quite a bit. The 30-year, we did 416,000 contracts, and this is a nice little setup. This 30-year never made the highs of August 24th. When that went forward on the October 7th, we went to 160.20. I expect you're going to see it up there, and we'll see whether it can take out the 161.17 if it has the volume for an additional ABC structure on the way up. King dollar can't handle higher price. King dollar out here is at 94.90. It's positive, but anything under 95.27 still sets up a run to the low out here of 92.85. And when you actually do look at this on a larger term chart, that little baby can get down to 85. Dow finished up 47, NASDAQ up 8, S&P's up 3.5. You stay right there, folks. We come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 47. Nasdaq was up 8. Yeah, the S&P is up 3.5. Let's go to Jack in Palm Gardens. Hey, Jack, how you doing?
Hey, Tom. How's everything?
It's going good, man.
Beautiful. Yeah, we had a nice day down here.
Oh, my God. It's gorgeous, isn't it?
It is. It's the best. But I just want to check in with you. This is I guess it's just a judgment call. If you didn't get stopped out of the SQQQ today, would you dump it here or would you hold it overnight?
Okay, so watch this, folks. We had inside the Market Insights, I had the Qs, the QID, and the SQQQ. And what happened is that it hit it right to the penny. I'll tell you what I did, okay? So when we're trading that, right, I trade the futures, okay? I closed half of the contracts that I have. That's what I did. Okay?
Okay.
Now, because this is what I'm doing, right? I'm looking at this, I'm saying to myself here, if I put up the NQs, right? This is what happens here, folks, okay? So you take the NQs, right? And so the NQs are the QQQ, folks, okay? It just happens to be in the futures. So if we put this up, you know, I'm looking at it, I'm saying to myself, okay, you know, my take is, you know what my take is, going lower. Then I'm looking at it and say, well, why even take, 15, what happens in the NQs, folks, it's $20 a point per contract, okay? So when I'm looking at this, I'm saying, yeah, we know we have lighter volume, but I'm not going to take the top of where this very well can go, the 17th is where 375 is 441. I'm not going to take that heat, you know what I mean? So.
Gotcha. No, that's just what I set my stop a few pennies lower and I hung on to it, but I think that's a good plan.
Yeah, it's not going to kill you, but you want to protect yourself here because there's plenty of bread to be made on the downside. You know what I mean? So it's just like, okay, just keep the money management in place, and because see, if we go over to Apple, it looks to me like Apple is at 111.60, and because what Apple did on Friday, what happened on Friday, folks, is that Apple, got a little juice in it. Apple had 52 million shares. It just looks to me like it's going to the 73, but it still looks like it wants to test that 113.51. Now, if that's what it wants to do, that alone, 2 points on Apple, folks, will put juice inside the Dow, the Nasdaq, and the S&Ps. Because when we had that big day in the market, it was Apple. That was all of Apple winning on October 2nd. Apple was only up 2.5 points, and that was the largest mover inside the Dow. Was it the second? Was the fifth? No, it was the second. It was coming off the bottom. It was the second. Apple was the largest mover, and Apple, from highs to low, Apple was up $5 that day, but on a positive, it was still only up $2.50. So it has that much weighting inside. Well, we know it has it inside the NQs because it's 14%, but it's still a very large weighting now inside the Dow and the S&P. So,
that makes sense.
Okay, man.
Thanks a lot.
Have a great one. Have a safe one. And what we do have happening, I think, if you come over to our website at TFNN, what you're going to see right on the front page, folks, is our man, Mr. Dave White, is going to be doing a webinar. Now, this is pretty cool because we got Kevin Hinks coming up next, our man from TD Ameritrade Think or Swim. He has an outstanding program on every Tuesday from 12 to 1 Eastern Standard Time. David, okay, because we have option expiration, which is this Friday, David's going to be doing a workshop, and what that's all going to be about is trading option expiration. That workshop, folks, is this Wednesday, It's 5:30 to 6:30 Eastern Standard Time. Now, if you're a subscriber, it's absolutely free. And you can be a subscriber for free. Just come over to our website at TFNN. You can sign up for a month. If you like it, it's still free. The next month would cost you $149. Bottom line, if you are a subscriber, you'll be in that option workshop, which is Wednesday, and that Wednesday workshop is going to be all about, what to look for as you come into option expiration. Now, the really cool deal, as I just said, our man, Mr. Kevin Hinks, has the best option show on the planet. It happens to be right here at TFNN. That option show is 12 to 1 Eastern Standard Time tomorrow. You can get it right on your cell phone, tfnn.mobi for the audio. You want the video with the audio, go to tfnn.com. You're going to see on the right-hand side, little box, the banner. Hit it, say Watch Tiger TV. That'll come right down the pike to your cell phone. And on the cell phones, it's pretty amazing. The clarity, folks, is just amazing how the platform comes out on the cell phone. And if you haven't test drove the Thinkorswim platform, great time to do it, folks. You can go to the top of go to TFNN. You'll see the banner on the top or the side. You hit that banner. You can bring it up. They'll let you trade with paper money. It's an outstanding platform. If you do happen to be in Las Vegas, TD Ameritrade, Thinkorswim, Kevin's going to be there Wednesday night, all day Thursday, all day Friday. We're all going to be there. They have a huge booth. We will have a booth. So come out and say hi to us. Volume, of course, today was anemic because, it was anemic, period, but you got Columbus Day holiday. We'll see what kind of action we get tomorrow. But you can expect the volatility is not going to slow down in this marketplace, folks. That's how this thing is shaking out. Let's go to Alex in Boston. Hey, Alex, what's going on?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
Good.
Good. Nice to hear from you.
I have a question about your subscriptions.
Okay.
Actually, which one covers ETFs and your subscription? Is it
It's the Market Insights. You can test drive Market Insights 2 weeks free. That's the Market Insights. The other one's the Gold Report. The Gold Report is just all gold stocks, silver stocks, and the actual commodity itself.
And that's your subscription, right?
Yes.
Okay. Can I ask you a few questions about sector rotations?
Okay.
So if we think that that's the end of the bull, right?
Yes.
So it should be healthcare first, but it's already down.
Okay.
Consumer staples, they are holding up very good.
Yeah.
The problem is energy, like XLE. XLE should be on the expansion phase.
I agree. No, I know what you're getting at. That if I think the XLE is going up, which I do, okay, I think you got to pull back and going up. It's like, okay, that's going to put juice into the general market, and it should. So I understand that. Yeah.
But that means that it's not the beginning of the bear market, right?
No, I wouldn't agree with that. But I understand the actual factual deal that if, in fact, energy is going up, it should grab the S&P with it. I guess we'll find out, are the other sectors weaker than that? This was the first time, and this started about 6 weeks ago. This is the first time that even when the S&P was pulling down, that the actual commodity stocks were getting a little juice in them. Now, I haven't seen that phenomenon since 2002, because realistically, the commodities always went with the S&P, but that's changed out. You can stay there. I got Kevin Hinks coming up next, but I'll be happy to talk to you after that, Alex, okay?
Today, it's
stay right there, folks.
The economy's coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished up 47, NASDAQ was up 8, S&Ps were up 3.5, and as we do each and every Monday at 30 past the second hour, we have our man, Mr. Kevin Hinks from TD Ameritrade Think or Swim. Kevin, folks, has the best option show on the planet. Happens to be right here at TFNN every Tuesday, noon to 1 Eastern Standard Time. Now, you can get that show no matter where you are in the world, folks, right on your cell phone. TFNN.mobi gets you the full audio. If you want to get Tiger TV, just go to TFNN.com. You're going to see on the right-hand side, it says Watch Tiger TV. You hit that, you're going to get all the charts, audio, video, all of the above. If you haven't test drove the Thinkorswim platform, do it now. Come over to TFNN. It's an outstanding platform, folks. I use it each and every day, whether I'm trading options, futures, commodities, or equities. You hit the button on the right-hand side. You'll see the TD Ameritrade Thinkorswim banner. You can bring it up. They'll let you trade with paper money each and every day. Thinkorswim has swim lessons. They're outstanding. Kevin's out there every day teaching you strategies, understanding how this option market works. Kevin Hinks, what's going on?
How you doing, Tom? Happy Monday.
Happy Monday, man. It's a beautiful thing.
Yeah, kind of the quiet before the storm today, huh?
I'm telling you, man, it's pretty amazing that, they pushed it. There's no juice behind the move, but they definitely pushed it to the top of this range.
Right. They didn't have much direction today because of, the Columbus Day. The banks were closed. The bonds were only trading on Globex.
Yes.
But starting Tuesday, we got financials all week. A lot of bank earnings.
Yeah, big time. And before the bell, what he's talking about, folks, is J.P. Morgan's coming out before the bell tomorrow morning. So that's going to get some action. You get Intel coming out. Oh, after the bell, J.P. Morgan's coming out. Intel, CSX. So there's no doubt there's going to be action out here. And, folks, if you do happen to be in Las Vegas, Kevin, myself, we're going to be in Las Vegas coming this Wednesday night, Thursday, and Friday. It's the Traders Expo at the Paris Hotel. Come visit us, okay? Because there's going to be a lot of great education out there. You're going to be able to see Kevin and the gang at TD Ameritrade Think or Swim. You got to love it, man. Totally.
It's going to be a fun week.
It will, man.
But we're going to be watching a lot of bank earnings this week.
Yes.
Just about every day, except Friday, we have GE and Honeywell. The rest of the week, it's all financial earnings.
Yeah, and that's going to be a big number because everyone's, the Fed no doubt continues to basically say they're going to go up on rates. The way that the banks are trading, it doesn't look like they're going up on rates.
It sure isn't. It sure isn't.
Yeah.
And the 10-year yield still sitting below 2.1 here.
Look at that, man. Kevin, I talk about this a lot because I like bonds in general, but it blows my mind how many years now the bond market has refused to give it up, man, and it still refuses to give it up. I mean, this thing, as Kevin just said, folks, you're inside 128.25, inside 128.19. Guess what? That's the highs.
Yeah. I mean, this has been the greatest don't fade the Fed ever. This is historic don't fade the Fed.
It is. It is. And what's amazing, it seems that every day, like the news out today, folks, and I'm not just talking about, I'm not talking about what someone says. The Fed, all their speaks themselves are like, no, we're going up the end of this year. Well, guess what? At the end of this year, folks, there's not even 90 days left to Christmas. I mean, we're at October 12th already, right? So it's like, you're really going up this year? I don't see it myself. But if they do go up, man, they're gonna put a shock into this market like no one's ever seen, like 1994 probably in the bond market. It'll blow some people's minds, man.
Yeah. Remember there was a day, Tom, when bonds used to be the safe place where there was no volatility.
What Kevin's talking, there's no doubt. Picture this, folks. In the 90s, equity trade is we would trade off of the bonds, and we were only looking for bonds to move 1 or 2 or 3 ticks. And that would give us an indication of where the equities were going. I'm just talking about being in and out, folks, not an investment. But it's that bizarre, okay, that it was 1, 2, or 3 ticks, and now bonds move like in 15 ticks is normal, right? It's like, oh, my God, it's amazing. Let me ask you. I got a call a little. In fact, he's still on the line. We were talking about the broad market, and what was intriguing, what has been kind of intriguing to me, is that the commodities, right? It's been such a smoking of the commodities on the way down since 2011. They have seemed to get some juice the last basically 6 weeks. I mean, in general, and I'm looking at him saying to myself, and so what the listener's question was, Kevin, was this. He says, man, I'm bearish on the broad market, right? But I'm really bullish on commodities right now because I like how they're coming off the low. But what has happened is that this is the first time that I actually saw even these small commodity producers going higher when the market is pulling back somewhat. And that wasn't the case because in 2002, when we had that run, the nice commodity run, everything was going up. Do you know what I'm saying?
Sure.
So it's like, it's going to be intriguing to see, can commodities run with the broad market not doing much,
Right. I mean, when you talk about commodities, you have to talk about the dollar.
Yes.
Right?
Yes.
And then you start getting into things like, commodities across the board. I'm talking about oil. I'm talking about grains.
Yes.
These are all a supply story.
Right.
You're at not historic, but year lows in the beans and meal and corn because of a huge crop coming out of the ground right now.
Okay.
In the grains. So, I mean, for the first time in really a couple of years since 2012, you're going to have a carryout in the grains, a significant carryout. So grains are going to be under pressure. For the first time in years, you may see these spreads start to trade at a carry again, finally, in some of these grains. Because there's a big, huge crop coming out of the ground.
And when you say a carryout, does that mean that what happens?
I mean the front month will be trading under.
Okay.
Where if you look at the grains now, none of them are trading under.
I see. Exactly. Interesting, man.
Yeah.
And if we go over to the dollar, I mean, the whole world continues to say we got a strong dollar, but yet when you look at the dollar hasn't moved since the high that was established out here, 6 months ago, basically.
Right.
Yeah.
They really have kind of, I don't know what you want to call it. Did the dollar run out of gas on the upside, or the things they're doing against it to offset it?
Yeah,
You know,
well,
if they raise rates, guess what? The dollar's going up because Europe isn't raising rates.
yeah, no, that would be the fundamental aspect, no doubt, right? Yeah,
Right.
Yeah,
And that's kind of the rock and the hard place trade that they got going here.
It is, man. It is, and there's a story out there today because of the fact that the European rates, and folks, if you look at this European spread, I mean, it's pretty. We're at 2.088. Well, France is at 9/10 of 1. Germany's at 5/7 of 1. And what the story was about, Kevin, was that so many of our American corporations have got debt in the euro. That bottom line is that, when you spread debt out in the euro, well, guess what? You got to turn in dollars and get euros. And it's like, okay, man, that's throwing a spin all over Europe. And in fact, that's throwing a spin to our own dollar. So that's going to be intriguing to see how that shakes out.
And here's the interesting stat of the day. 27 of the 30 Dow stocks need do better with a lower dollar.
Ooh, that's interesting. Yeah.
So that's going to put a headwind in some of these stocks if this dollar starts getting stronger.
Yeah, wild, man. And then,
Can't wait to see you in Vegas, buddy.
You too, man. Hey, have a great one. Have a safe one. We look forward to the show tomorrow.
All right, buddy. Have a good one.
Thank you. That's man Kevin Hanks from TD Ameritrade Think or Swim. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go back to Alex from Boston. Hey, Alex, thanks for holding, man. Appreciate it.
Thank you for having me.
Absolutely.
So my question was, about energy stocks.
Yes.
And actually, it's not the start of a bear market if energy stocks are rising at the moment. Also, if you will take a look at the dollar index,
yep.
To me, dollar is going down.
I agree.
And the next should be like Verizon, AT&T, and we have a lot of time to go up, not down.
Okay, so when we take a look at, I mean, I can see the aspect that, Verizon's a decent-looking stock, but I think the phone companies are ruling now. There's no doubt about that.
And they should be the last to at the end of the expansion.
Well, if we take a look at Verizon, okay, and I happen to own all of these stocks, but I've never sold them. My mother gave them to me, and she was a telephone operator, okay, for AT&T. If you look at these, this has already had quite a run. This already went from $21 to $44. That's a 100% move. I mean, I think people own these, and you're collecting at a 5% dividend. Yeah, 5.1.
Yeah, but take a look at AT&T.
We're at $33 right now. And yeah, well, AT&T is intriguing, no doubt. So AT&T, went from 22 to 33, and yeah, can it get it higher? Yeah, it can, and that's probably about, what do they buy? They bought Dish, right?
Yeah.
Yeah, no, I can see that. But that just because of that doesn't mean that the broad market's not going to pull back.
I agree with you, but energy first and then telecom.
The telecom, is not a huge part. Energy is, however, okay? So watch how, listen, none of us know how this is going to play out. My larger take here, though, is that we have inflation happening right now. We're right in it. And if that's the case, what you could have is that energy will go, the S&P will go down, or can go down. The reason being is that the formula inside inflation goes like this, is that you're going to take the cost of money, you're going to take the inflation expansion, you either subtract it, you're going to subtract it either way. It just depends on, is the bond going to be on top or is the inflation rate going to be on top? And that's going to show you what the actual real rate of inflation is. And it looks to me that that's where we're going to be going. Now, what ends up happening with the dollar inside of that, which has to play on it too, is that if in fact inflation is going faster than the bond market right now, which is 2%, and they don't raise rates quick enough, you can have the dollar going up, you can have energy going up, and you can have the market going down. Because that's, we ran like that from 1972 to 1979. I wasn't in the market then, but I was in the restaurant business then, but I remember how that market was running out. And then when the Dow was at the 682 or something, that's when, at 1980, that's when this thing took off, and that's when the rates, folks, were at 14.5%, and that was the beginning of the largest bull market ever in history, and we're still in it in the bond market, so 14.5% down to zero. So that's kind of my larger take. I mean, I'm watching it, we'll see how it trades out, but that's what I think's happening. And you know where I'm going, Alex and folks, with this, right? This is what you should do. So picture something, I'm a technical person, but when I started this business, I ripped apart balance sheets. So I started as a fundamentalist in 1980, bankrupt balance sheets, okay? Bottom line is that you always got to look at the larger portion and see what's happening. What I do now is that whether I'm buying Starbucks coffee or I'm buying something else, what I do is I multiply the cost that I'm buying something that you throw away or and then I correlate that to some hard asset. And none of these correlations make sense to me anymore. I mean, I shouldn't be buying a thing except hard assets. You know, because if you buy 1,000 cups of Starbucks coffee, guess what? You can buy a plot of land. It's like, that makes 0 sense to me, okay? So when I look at it that aspect, it looks to me that inflation has snuck in here in a huge way, and where it snuck in are the smaller items that we actually buy, that if you add them up, they're dramatic, they're insane how much they're costing, you know? And that includes food, which everyone needs food. Everyone needs a place to live. If you just take the food and where we live, it's inflation, like we get inflation big. All the apartments that we have, I went up 10% last year, I'm going up another 10% this year, and guess what? I lost one tenant out of 40 tenants or something. Do you know what I mean? It's, you know, where are they gonna, it's, you know what I'm saying? So we'll see where it shakes out, brother.
Thank you so much. I appreciate that.
Have a great one, man. Have a safe one. Let's go to Leo in St. Pete. Hey, Leo, what's going on?
Hey, Tom, thanks for taking my call here, buddy.
Sure.
I got about 5,000 shares of APDN. I had it before the split. I know that the last week or so it's been moving. I think it went up as high as 910. What's your take on this stock?
APDN, that's Applied DNA Science. They provide security solutions to corporate intellectual property from counterfeiting and fraud. So this is a penny stock. It's pretty amazing.
But yeah, it split and then it went up, and then the numbers start just going up the last month or so.
So listen to this, folks. This is about as insane as you can get. It has a market cap of $172 million, and they only take in $2.7 million. I'd get rid of it as quick as you can, man.
Yeah, but I'm up like 15%. I should sell this stock.
You're up 15%?
Yeah.
You better get out of this stock, man. Just think of this in a second. You're up 15%. This stock isn't worth $8. This, okay. I mean, you know what I'm saying? If you had a business, right? This business. So market cap wise, you just gotta look at this again. Yeah, 2.7 million. Okay, so right now they're taking in okay, this year is gonna be 7 million. So you take in $7 million, and you have a market cap of 172. That makes 0 sense. Take your money and run. And I'd be really careful about getting back into something like that again, man.
Okay.
Cooking, brother.
I appreciate your input, Tom. Thanks.
Okay, man. Have a great one. Have a safe one. It's pretty intense. You know, it has the juice. You know, it's interesting because it had the juice behind it. It got up to $8.58. So watch this, folks. It came off $2.50 August 7th. So in 2 months, it went from $2.50 up to $9. It failed last month. So what that sets up, now that sets up a pullback to 608 to 443. And just in that aspect, listen, that could be a normal pullback. And that's how the stock trades. The stock was at $18 in December of 2012 and then went down to $2. Pretty intense, man. It's a wild trading stock. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 47. NASDAQ up 8. S&P's up 5.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. We go over to Fortress Investment. This closed at 544. This is trading out at 517 right now. And let's see, they're closing a large macro fund. Fortress Investment plans to close down its macro hedge fund after 2 years of losses, according to personal knowledge of the firm. The firm is expected to inform investors about the move in the coming days. The macro fund has lost 17.5% this year through September after losing 1.6% in 2014. The macro business had $2.3 billion in assets. Pretty amazing. So let's go just take a look at Fortress here. Fortress has been on a one-way slide too. Fortress, man, it's pretty intense actually. So this is down. Well, not down from 865 to 544, and you get a high volume swing low at 416. What does happen with those funds, folks, is this. So picture the way this works is that inside a hedge fund, of course, right? You have to hit the high water mark. So that's why you have seen so many of these close down in the past, and particularly in this year. One of the main reasons a lot of these large macro funds were making bets on emerging markets, on China, on India, all the above, that larger picture. And in this particular case, in order for that fund to make money, for the actual fund, what has to happen is that they'd have to go back to that high water mark, meaning when you're down 17%, man, you've got to go up a huge amount of money to get back to 17%, never mind making money. So what they do is that they basically, they do close them down. Then they'll just turn around and, wait a bit, and then they'll go out there and go get more money, because that's they had $2.5 billion. That's a very large fund in order to close down. There's been quite a few of them lately, though, because of the carnage that happened in the emerging markets in China. And we talk about China. Now, this is going to get intriguing in China because even talking to Alex, there's a lot of divergence that's out here. And my take is that the S&P still wants to go down, that commodities do want to go up. And now what's happened is that we had a sign of strength in Shanghai last night. If you watch this because this is going to be intriguing. Like, okay, if Shanghai wants to go up too, it's like, oh, really? So Shanghai, there's been a downtrend for a huge amount of time. So last night, guess what? This thing had some juice behind it. We take a look at it on a monthly basis. Shanghai just went from 51.78 down to 28.50. My take is that we're going to get to 2,500. You didn't make that, But if we come off this with juice, which last night was the first night that we did, and you wouldn't buy it. The way that you set this up, folks, is that it came up last night into its downdraft, and it was the first time that it had real juice behind the move. Now, you wait for a pullback to see whether the price can hold. Because what has happened in Shanghai, every single price has not held. You just kept getting the lower lows, lower lows, lower lows. And now, you busted the lows, and yeah, busted them on lighter volume, but guess what? You wait for the price to basically hit also. And Shanghai right now is at 32.87. If you got inside the 33.73, which is another 90 points, then you do a pullback. That could be saying that that wants to go higher. Now, what would be intriguing there is that that's where the commodities also would take off. The squeeze is still on Glencore. Glencore, folks, is still having, if we go over to the UK for a second, Glencore, they're unloading assets as fast as they can, and they're claiming that they have plenty of money. But the way that Glencore is looking at unloading assets, I wouldn't believe a word they're saying right now. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it, folks. Everything you need is right inside you. Grab it and have a blast with it. Thanks for being here. I look forward to speaking it right here tomorrow. Go get them, folks.